Net operating income versus cash flow. So here's an example of everything we've done in the past. We jumped through a few hoops to calculate effective rent, and we jumped through a few more hoops to get operating expenses. Now we're ready to combine these together into net operating income and cash flow. So the formula to calculate net operating income is effective rent minus operating expenses at the property. That calculation's pretty straightforward. And by the words used, net operating income is the income produced by the property through operating it. Net basically means what's left over after all expenses have been paid. But for net operating income or NOI, it has to do with operating the property and nothing else. Here's how it's calculated. Effective rent minus operating expenses gives you net operating income, and you can see a 3-year example here. Now let's look at cash flow from operations. Cash flow is the money you pull out of the deal. In addition to paying operating expenses, you also have the additional expense of loan payments if you have them. Loan payments are an investor-specific item. Not every buyer is going to have a loan. Someone could buy it cash. Some investors are going to have better loan terms than others. Hence, they may have a lower interest rate and a lower payment than other investors. So loan payments is a very investor-specific thing. So that's not included in net operating income. That's included in cash flow from operations. And what this basically says then in the end is that cash flow from operations is more likely to be different based on the investor buying it, whereas net operating income is probably going to be fairly similar no matter who owns that property. You're going to have the same property taxes. You're going to have roughly the same insurance costs. You're going to have the same lawn mowing, maintenance, all that other stuff we talked about in expenses. It's going to be fairly similar no matter who owns that property. Some investors run things a little more expensively than others, but things are roughly going to be the same. And your net operating income is roughly going to be the same. But when you get into investor-specific things like loan payments, that's going to really change cash flow from operations depending on how the investor approaches buying the property. So let's look at an all-cash purchase. That means no loans. Net operating income and cash flow are exactly the same. And that's fine. Here's what it looks like though when you take out a loan payment. Your net operating income and cash flow differ dramatically. You're going to want to pay attention to both net operating income and cash flow. If you're comparing cap rates at this property to other properties in the market, you're going to want to use net operating income. However, when you're calculating your total return on your money invested in this property, you're going to want to use cash flow. So each of these numbers has different meaning and different uses. In my opinion, though, cash flow is most important. So since we didn't really talk about taking out loans yet, let's go back to the all-cash purchase example, where net operating income and cash flow are the same. And now that we have the cash flow, we can start to fill in our template that we put together in the first video. We have our cash flow from operations, and now all we need is the cash flow from our eventual sale to get the total cash flow. And once we get the total cash flow, that's what we're going to use to value the property. Now let's go see NOI and cash flow from operations in action.